Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal and here's a look at the stories for the day.
रामू दो चाय दे यार।
अरे नहीं यार, एक चाय कॉफी।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का home loan? I agree with you.
SBI is the banker to every Indian.
India is exploring a Rupee-Ruble trade mechanism with Russia to circumvent the sanctions imposed by the US and its allies on Moscow. What are the options on the table and how feasible will they be in the long run? Watch our next report to find out.
Earlier in March, Business Standard had reported that the government was looking at allowing India-Russia trade in local currencies. Initially, this would apply to sectors such as agriculture, pharmaceuticals, and energy, where sanctions had not been imposed by the US and its allies. The understanding was that a similar call regarding trade in defense equipment and dual-use items would require extensive deliberations. Cut to the present, there has been progress in enabling India-Russia trade in local currencies. Last week, the Reserve Bank of India reportedly met with officials from 3 Russian financial institutions to discuss possible payment mechanisms that would enable trade between the two countries. The Russian institutions involved were VTB, Sberbank, and Gazprom Bank. According to a financial daily, one of the options is a Rupee-Ruble trade mechanism. The idea calls for deeper engagement by Russian banks that have a presence in India in order to facilitate the trade. A banker told the Financial Daily that under such an arrangement, there might be no need for an Indian bank to play a nodal role, as UCO Bank did for trade between India and Iran after the US had imposed sanctions on the latter. So, how close are we to operationalizing this mechanism? Federation of Indian Export Organizations President A. Saktivel told a news channel that the Rupee-Ruble trade mechanism could come as early as this week, but there are multiple challenges involved.
Rupee-Ruble trade was very useful for India. It allowed us to save on our foreign exchange, and I'm talking of the Indo-Soviet relationship. We're talking of the 60s, the 70s, and there onwards. It allowed us to save our foreign exchange. Russia at that time, or Soviet Union, at that time was amongst India's largest trading partners. The other useful thing was that the rate of exchange was fixed. It was not a floating rate. It was a fixed rate. In those days, both the rupee and the ruble were non-convertible currencies. Today, the ruble is a convertible currency and the rupee isn't. So we will have to find some kind of mechanism to deal with that particular problem. And so therefore, fixing the rate will probably have to be a floating rate. I don't know how this is going to be resolved. I'm not an economist, so one cannot predict, but that would be one possible challenge.
Net, we import much more from Russia than we export. So what would happen is if we did a ruble-rupee trade, the Russian exporters who are sending stuff to us will soon see their rupee balances ballooning up. Okay, and because of sanctions with other currencies, they will not be able to convert these rupees into foreign currencies or into gold or anything else, which means they won't know what to do with these rupees. They'll have to invest them here, or they might have to increase their buying from India in a dramatic fashion, which is not easier said than done. Ruble right now is very, very volatile because it's there are lots of restrictions on trading ruble. So determining that Rupee-Ruble rate will be a challenge. In the past, when we had the former Soviet Union and then in the early 90s, there were government-to-government Rupee-Ruble trades and Rupee-Ruble debt, etc. involved, where the rate was determined not based on commercial decisions, but based on geopolitical considerations. It was, some people gave, some people took, and, everybody was by and large happy. Now, as commercial entities doing export and import, we are not going to accept some non-commercial rate. We will, as an exporter, I will want a proper rate for my my goods. So that will be the second challenge. Determining the actual Russian ruble to rupee rate will be the second challenge.
There might be a solution for the Russian banks participating in such a trade. An official from an overseas bank told a financial daily that Chinese banks in India could be tapped for this. How would this work? The Russian bank would swap the rupees for renminbi from a Chinese bank branch in India. Unlike rupees, renminbi can be used by Russians. Meanwhile, the Chinese bank can use the rupees to buy dollars, as it does not face any sanctions. However, fluctuations in the ruble's value could make things difficult when it comes to deciding the exchange rates. But why do we need such a mechanism in the first place? At the beginning of March, it was reported that Indian exporters were skeptical that payments worth about $400 million might get stuck as certain Russian banks were blocked from accessing SWIFT. Exporters had found that many buyers did not have the ability to make payments in any foreign currency or from a third party or country. However, they showed a willingness to make payments in rubles. Also, as India's export to Russia is not considerable, there is an opportunity for Indian companies to enter the country while the West exits. During April 2020, March 2021, according to Russian figures, bilateral trade amounted to $9.31 billion. Out of this, Indian exports amounted to $3.48 billion and imports amounted to $5.83 billion. Business Standard has also reported that India might import close to 2 million tons or about 15 million barrels of crude oil from Russia in 2022. The aim would be to take advantage of Moscow's offer to sell its crude oil cheap and bear insurance and transportation costs. The transactions involved are likely to be in rupee or ruble terms. In the end, whatever mechanism India settles on, it will have to tread carefully given the geopolitical stakes involved.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After Russia, let's move our focus to India's southern shores, where refugees from Sri Lanka are slowly trickling in. The effect of Sri Lanka's economic crisis is now being felt in India too. Our next report offers insight into the island nation's economic condition and how it's hitting India too.
Inflation has soared past 17%. People are dying while waiting in long queues for fuel, and authorities are scrapping school exams after running out of dollars to import paper and ink. Sri Lanka is going through its worst economic crisis since its independence, and the ripples are now being felt in India too. Driven out by hunger and loss of jobs, people from the island nation are seeking refuge in India, which is doing its best to help the neighboring country. India has extended financial assistance to the tune of $2.4 billion in the last 3 months to Sri Lanka, which includes a $400 billion RBI currency swap, deferral of a $500 million loan, and a $1.5 billion credit line for importing fuel, food, and medicines. In addition to an International Monetary Fund bailout, the southern neighbor has sought credit support of $2.5 billion from China. The island has been facing daily power cuts and double-digit inflation, which hit 17.5% in February. The Sri Lankan Central Bank allowed the local currency to devalue by 30% in a month. The crisis has been mainly caused by a shortage of foreign exchange reserves. They have plummeted 70% in 2 years to just $2 billion at the end of February, which can barely cover 2 months of imports. Meanwhile, the country has foreign debt obligations of about $7 billion this year. The forex crisis is the result of several factors. Tourism, which is the country's third largest foreign exchange earner, came to a virtual halt after the 2019 Easter Sunday suicide bombings, which killed more than 250 people. Tourist arrivals dropped by as much as 70%, and then the pandemic struck, dealing a severe blow to the tourism industry. And remittances from foreign workers, which is the nation's biggest source of dollars, slumped 22.7% to $5.5 billion in 2021. The country's heavy dependence on imports for essential goods like sugar, pharmaceuticals, fuel, pulses, and cereals worsened the crisis. The government's ban on chemical fertilizers last April, as it looked to become the first country to fully adopt organic farming, backfired. A survey showed that 90% of Sri Lanka's farmers used chemical fertilizers for cultivation. The move led to a drastic drop in domestic food production, pushing up food prices. The decision was rolled back after months of mass protests by farmers, but the damage was done. Food inflation soared to 25.7% in February. The crisis is now starting to impact Indian exporters. Thousands of containers sent from India to Sri Lanka, including for its own consumption as well as transshipment cargo, have been lying uncleared at the Colombo port, as authorities can't afford to transfer containers between terminals. This in turn has led to some buildup of cargo intended for Sri Lanka at Indian ports. India also relies considerably on Colombo port for global trade, given it is a transshipment hub. 60% of India's transshipment cargo is handled by the port. India-linked cargo in turn accounts for 70% of Colombo port's total transshipment volume.
Primary issue. Some of the shippers are not ready to accept payment in Indian rupee. They want USDs only. Even the credit line extended by India, which has not yielded a result as of now. 1,500 containers is stuck at a Sri Lankan port, which already imported. It needs to be taken at a priority level. How best the payment terms is being adjusted. There are 3 terminals inside the port. This container has to be transshipped to the next terminal. Minimum is 8 kilometers distance between the terminals. The non-availability of fuel may result the outsourcing company to demand more money. Number 2, port city is 100% is a labor-oriented port. If the food prices escalate, there is an forecasted unrest will come. It's a big problem for us.
India has traditionally been among Sri Lanka's largest trade partners. Prior to the pandemic, India was the top tourism source for Sri Lanka. More than 1/5 of Sri Lanka's total imports come from India. India is also one of the largest contributors to FDI in Sri Lanka. FDI from India amounted to about $1.7 billion from 2005 to 2019. After China and the UK, India was the biggest source of FDI for Sri Lanka in 2019 at $139 million. The main investments from India are in the areas of petroleum retail, tourism and hotel, manufacturing, real estate, telecommunication, banking, and financial services. A number of leading companies from India have invested and established their presence in Sri Lanka. These include Indian Oil, Airtel, Taj Hotels, Dabur, Ashok Leyland, Tata Communications, Asian Paints, SBI, and ICICI Bank.
I would say that the situation is now definitely on the mend. It is improving. And once the flow of tourism, the flow of remittances also starts coming back, then I think the situation will improve much further. And I would say that the support of the Indian government has been extremely important, and it has really infused a lot of confidence and a lot of enthusiasm among Indian businesses as well. And I would say that, in fact, this is actually opening new doors for Indian businesses in Sri Lanka. In fact, recently we found that the hotels in Colombo are actually quite packed. The flights are also seeing very good occupancy. So I think there is a lot of interest right now from Indian industry in doing business with Sri Lanka. I think Sri Lanka is now looking more at sourcing from India because Indian goods are not only more competitive at this current point of time, and I think the Sri Lankan government is also keen to remove some of the trade barriers and to encourage more investments from India. So they have looked at infrastructure investments, energy investments. There may be some few drawbacks to the current situation, but they are very temporary.
Although Sri Lanka holds minor importance to India in terms of trade, it is a geopolitically important country and India needs to counter the growing Chinese influence on its economy. At $4.8 billion, India's annual exports to Sri Lanka accounted for just 1.3% of India's total exports. Sri Lanka's share in India's total imports was just 0.16%. However, any disruption in Colombo port operations makes India vulnerable to an increase in costs and congestion issues. While the work on building a transshipment hub in Kerala has begun, it is in India's interest to help Sri Lanka come out of the crisis in the short term.
यार
मत पूछ यार,
फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर। इसमें बहुत तामझाम है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
From the foreign shows, let's see what is happening in stock markets back home. Despite being considered a safe bet in a choppy market, investors have dumped FMCG stocks in the past few months. Watch our next report to know what is scaring investors away from these counters and whether there are any good investment options in this pack given their technical chart patterns. Rising input costs triggered by soaring crude oil prices have dented sentiment of fast-moving consumer goods stocks over the past few weeks. Considered a defensive bet in a turbulent market, investors dumped these counters even as the overall market sentiment remained choppy. This was due to surging crude oil prices, which triggered an upward march in prices of most raw materials used by FMCG companies, which could chip away their margins. Over the last quarter, prices of commodities like palm oil, crude oil and S&P are up 23 to 42%. At the bourses, the S&P BSE FMCG index has lost nearly 5% as compared to over 3% fall in the S&P BSE Sensex. If analysts are to be believed, there could be more pain ahead for these stocks as crude prices continue to rise amid the geopolitical tensions between Russia and Ukraine. After a 4.5-month freeze, the government bit the bullet and has started to hike prices of petrol and diesel gradually, which analysts say could fuel inflation and force consumers to cut back on their purchases. Besides, the upward revision of fuel prices would also translate into higher freight costs and keep rural demand under pressure. On their part, FMCG companies plan to hike product prices yet again to cope with the rising raw materials cost. But industry incumbents and dealers or distributors have highlighted that Q4 saw further moderation in rural demand due to price hikes. Urban markets too witnessed some demand slowdown. Instead of a recovery in gross margins in fiscal 2022-23, Jefferies now builds in 50 to 200 basis points year-on-year decline, assuming crude oil prices stay closer to $100 a barrel and palm oil at $1,500 per metric ton in FY23. At the fundamental level, GCPL, HUL, ITC, Colgate, Devyani International and Zomato are Jefferies' top picks in the FMCG space. Mumbai-based Antique Stock Broking is bullish on HUL, Dabur and ITC. Let's now go to Business Standard's Abdul Bakar to understand how frontline FMCG stocks look on the charts and whether there are any stocks worth your money at the current levels.
On a wider perspective, Nifty FMCG index and its constituents and its stocks aren't performing the way they used to perform a few years back. Nifty FMCG index itself is trading below 200 days moving average, a relevant indicator that investors considers as a significant component while investing. The benchmark indices Nifty 50 and Sensex have retrieved back about 200 days EMA after the recent correction, whereas Nifty FMCG index failed to do so. Among FMCG stocks, except ITC, which is on the verge of claiming a new 52 weeks high, the prior 52-week high was 259.20, it is showing sign that it can cross and stay bullish for some more time. Whereas other stocks like Hindustan Unilever, Dabur and Colgate-Palmolive continues to trade in a negative sentiment. Hindustan Unilever has a resistance of 200 DMA, immediate resistance come to 2200, and it is showing signal that it can fall towards 1800, can even see further decline towards 1700 levels. While Colpal, which is currently trading sideways, may see some positive sign if it holds 1450 levels, which is a crucial support for these stocks.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and reporting with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the safe FMCG bets, let's know more about a technology which is making our transactions safe and quick. Merchants use payment gateway to accept purchases from customers. Let's see how it works.
Payment gateway is a technology used by a trader to accept debit or credit card purchases from their customers. The authorization process can be provided by a bank to its customers and can also be provided by a specialized financial service provider as a separate service. A payment gateway works when a customer orders a product from a merchant who has enabled the system, following which it performs a variety of tasks to process the transaction. These online payment gateways require application programming interfaces that allow the retailer to communicate with the underlying payment processing network. A payment processor uses that information to charge the customer's bank or credit card provider. The brick-and-mortar store payment gateway utilizes a POS terminal that connects to the payment processing network electronically using either a phone line or an internet connection. The system has always been evolving to reflect consumers' technical capacities. Earlier, terminals used to accept credit cards with magnetic strips and needed paper signatures from the customer. But after chip technologies, the signature was removed in favor of a personal identification number entered directly into the payment gateway hardware. Now, contactless purchases are available, with many opting for phones as a payment device instead of a plastic card. The architecture of a payment gateway will differ depending on whether it is an in-store gateway or an online payment portal. Online payment gateways will require application programming interfaces or APIs that allow the website in question to communicate with the underlying payment processing network. In-store payment gateways will utilize a POS terminal that connects to the payment processing network electronically using either a phone line or an internet connection. There are various payment gateways in India that allow customers to make payments online, such as Citrus Pay Payment Gateway. It supports most credit cards and the payment process is quick and secure, as Citrus Pay has high levels of security in place. CC Avenue Payment Gateway offers multiple payment options and is available in 18 different languages. PayUBiz India Payment Gateway is a well-known payment gateway that supports cards, net banking, wallets, international cards, EMI, IVR payments, etc. And then there is BillDesk. A lot of Indian banks are connected with BillDesk to make the payment process simple, quick and safe. And last but not least is UPI or Unified Payments Interface. This is an instant payment system which has been developed by the National Payments Corporation of India, and the interface is regulated by the Reserve Bank of India.
यार आइसक्रीम खाएं? नहीं यार, कुल्फी।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
अरे SBI contactless debit card? I agree.
SBI is the banker to every Indian.
Did you know that some payment gateways facilitate payment in cryptocurrencies as well? Well, that's all we have for you today. We will be back with more news and analysis in our next episode. Stay tuned. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.